Hey, g'day guys, it's Sam here from Trade to Prosper. Today's Friday the 9th. It's really early in the morning, or 1 a.m. So I'm about to go to bed. I just got a trade in with this move to the upside. So I traded the breakout, got my stop loss further down. So I thought I might as well give a briefing on Bitcoin. If you recall, if you looked at my last video, I did actually make a good call. I did talk about liquidity and liquidity pools, and I deleted that, but this was a liquidity pool based on the wicks, and I said it's likely to reverse. And for the entry, I did talk about this particular formation. There was two. There was a 1, 2, 3, and this level was the breakout level. There was two levels I was interested in. The other one was a double bottom, and up it went. And then I did talk about certain scenarios, and I think, what did I do? I did talk about before it happened, but anyway, let's go back to what's there. So I made a good call, and it was a good move, and the pullback. Now what you can see is also talked about this neckline, and it's a weekly level. So how do we get the weekly level? With the weekly candle. So if we were to do this, that weekly level is based on the weekly candles along that level. So that is the main resistance. Then we've got the monthlies as well. So if we were to go to the monthly chart, we have some monthly levels as well. And you can see the monthly, it would be really nice if we could close the monthly above this previous monthly level. And unfortunately, I don't have the monthly level there, so I should do that. Let's just copy that and move it. That is our monthly level. I'm not sure why that's not there. Give me a sec. On the bottom of the candle. So now we'll go back to our 4 hour. And I think it was 4 hour. So actually just go to 8 hour. So I made a number of assumptions. There's current a few scenarios possibly in play, but this neckline is very evident. It is our weekly level. It's also probably our daily level as well. And we are currently at its resistance. Looking at this, it does want to go higher. And I'll talk about the trading possibilities. But at the moment, we have the monthly level, which this is going to be a strong resistance. Now, this is granular, but when we look at this one on the big picture, which is the daily, we have a number of moving averages that are pretty interesting as well. So here we have the 50 daily moving average, EMA, and that you can see that started to play a resistance role, even though this came out, as you know, it was for liquidity. All these shorts, for probably a week of shorts, they go, yep, let's just grab it, and then down. So whenever you see that, guys, whenever you see a price broken up, be ready for a drop. So if there's liquidity up here, and price goes from the bottom up, and it takes that liquidity, be rest assured along the left side of it, if there's any particular resistance levels like this one here, and we can say, all right, let's just make that in a color that we can see. You can see that level is very particular in previous resistance. Like there's a few of them, very hard to see best fit, but that is a resistance. It's also probably a Fibonacci level as well. So you get the breakout, gets the liquidity, and then pulls back down, and very much like previously, and I spoke about this, like this one here, it goes above, gets the liquidity, and then goes down. So we did that, but we found that the moving average here, so 200 daily, I think there was another one as well, can't remember, on the CME chart. That's right, the CME chart actually does a good job of it. I think this is the one. This is the CME chart, and the CME chart does a perfect job getting that. Well, what I actually got the wrong. That's the Fibonacci moving average. So you can see that 200 EMA is perfectly there on the CME chart, whereas other charts it's not that. Not like that. So you got to be careful which is the predominant chart that dictates what's taking place. So that was another reason why. So this will slightly be higher on other charts, as you can see. So there's a number of ways of looking at it. We called it liquidity, moving averages, and it's probably Fibonacci as well. If we went to try that out, there's ways of looking at it. Now, is this a descending channel or descending wedge? Maybe. So we did say this could be the one. You can ignore that. And there's a method to that. If you look at a few charts, you can call this out more so. So we might get a resistance just above this. Well, we might just come back down with swing failure trades. So our swing failure trades is here. We have a daily level and we have this upper level right there. So if we were to keep going, we can have two scenarios where we just hit it and then come back down. Or we go above it, hit this Fibonacci level of 27,000, which is a round number, and then we come back down, and then we have that range. So I'll be looking for that trade if this just keeps going. And yes, we can find resistance, but the fact is, when you look at this chart, it's the 200 moving average on the weekly it's playing as support ever so slightly. So, and then we have these two moving averages, the 50 and this, I believe, the 100. You can see that the fact that those two are coming together is this level is going to be a strong resistance. And we have the daily level pretty much there, right? So our liquidity pool is just above that. We might just hit that because there was a whole bunch of shorts there for about a week. So we might just wick up there. We might just go straight up and then come back down, which is about, that might be 27,600. So if we look on 27,600, we're looking at that one there. So if we go above that, then come back down, then we have that range, which doesn't surprise me. So we've got a number of levels of interest to range. A bottom range is that, so we've got the top range and the bottom range, and we might just go sideways for a while. So that one there, not that one, where was our 27? Yes, that's the one there. We have the daily, and we've got that wick as well. So the 2 weekly level might be a case. Yes, Bitcoin is going up, so it's just looking good. And I didn't execute this one that well, unfortunately. There's a thing knowing it, and also a thing executing it. We did call this out in our channel about a reversal pattern. This looks like a reversal pattern, and if you look at it carefully and look at my Fibonacci, the way I've aligned it, look, before it came down there, we got a 0.5 or the 0.618 golden ratio. It does sort of make sense, and this was a reversal pattern, and you can see it's still. So that was a swing failure pattern to keep going, and that was a second retest. So we can see that this range is accumulation. Now we're going up, and the question is, based on this structure, how high can we go? We can now adjust this and put our 618 there still. The 1.272, you can see how the 1.618 is just above that level. So we might just go above it for a swing failure pattern, and once we do that, we'll probably come back down again and range. So we'll be ranging in this top quadrant. So we have our bottom. So we have a daily bottom, and we will have our daily top of some sort, and then we range in there, and then still looking bullish, guys, and we'll see that breakout and then continue on. So if this is a wedge of some sort and we continue on, we range, it's either going to come down again, double, but I think it might just go up. If we break that above that and come back to retest, and there's another entry, and then so on, and that will be an interesting pattern. But this is a very strong resistance line, and the fact that we break out of it, it's probably going to look really good. So So that's all I have. Please give me a like and share. Talk to you soon. Cheers.